Well, the world's second biggest economy and largest manufacturing hub is facing mounting risks. Economists expect more pain ahead for China, even as its first quarter GDP growth of 4.8% beat estimates. Now, Beijing is warning of significant challenges ahead as it battles its worst COVID outbreak in 2 years. Now, some sobering data for March. Retail sales slid 3.5%, which was worse than expected. It also reflects a weaker consumer demand. Home sales by value slumped more than 26%. This means there is no pickup in the property market, which contributes to about a quarter of China's GDP. Labor data also gloomy. The jobless rate climbed to 5.8%, which is the highest since May 2020. Now, China's economy is under more strain this quarter as lockdowns continue in parts of the country, including Shanghai. The Statistics Bureau says Beijing will make every effort to stabilize the economy. It reiterates the economic recovery has a solid foundation. For more, we're joined by Dan Wang. She is a chief economist from Hang Seng Bank, China. Well, Dan, are we looking at a sharp slowdown in the coming months for China?
Well, the second quarter is absolutely a big challenge for China because if we're only looking at the GDP growth in the first quarter, it doesn't seem that COVID control or the Ukraine war had made a dent over there. The 4.8 GDP growth was beating the market expectation by a wide margin. But in the coming month, I suspect that the repetitive occurrence of COVID and the stricter lockdown in many cities in China would eventually disrupt the supply chains, and the consumption weakness would continue. A weak property market probably will also continue, and those are the headwinds that China has to deal with.
Well, there's been talk of Shanghai easing curbs this week, but realistically, how long would it take, most factories to ramp up to full production and then for this to feed into economic growth?
Well, if the lockdown does end this week, which I think is highly unlikely since I'm locked in my place in the fourth week already, there is no sign whatsoever on the immediate ending of all this. If that actually happened this week, then I believe within 1 or 2 weeks, all the production will be back to normal because supply chain security has been the priority for COVID control. They would be really the prioritized task for local officials. I have no doubt about that. Right now in Shanghai port, the delay in shipping and the custom clearing is between 2 to 4 weeks. And if somehow this lockdown extends for another 2 weeks, then I would think China's manufacturing along the coast and also many other related services industry would suffer by a great deal. And then we're probably looking at a Q2 GDP far below the 4%.
Yeah, and with that in mind, how likely is China's growth going to meet the government's full-year target of 5.5% then?
Well, that's a very interesting question because the first quarter GDP exceeds people's expectation. And the second quarter, there is likely to be a sharp slowdown. But if the COVID is under control by the end of second quarter, then I believe in the second half of the year, there will be a relatively strong rebound in consumption and city services, which would bolster a big part of the economy. Another headwind is from export. Given that most of Western economies are hiking their interest rate, they might reduce their import demand from China. But at the same time, the ASEAN economies are picking up their pace in factory activity, and they rely on China for the export of industrial inputs, and that could negate much of the loss from the U.S. import. And I believe that the central government has determined to use countercyclical monetary policy to support the growth whenever it's necessary. Right now, the policy is quite conservative because the real economy figure is good. But once it turned really bad, like if we see a really bad figure in the second quarter, then I believe the policy response will be a lot stronger.
Well, and then what are the risks of continued lockdowns in China on the global economy, which is already strained by the war in Ukraine?
Well, the global economy will have will have a very hard time if China doesn't get its supply chain back online. Because right now, it's not just that China cannot ship things out, it also cannot get things in time. There's a liquidity problem across the board for Chinese factories. The transportation delay means there will be a shortage of consumer goods for the US, at least in the second and third quarter. And for the European market, they are already facing high inflation due to the Ukraine war. And a shortage of goods coming from China will drive that even higher. And then for the market sentiment, a sharp slowdown in China's economy will weigh on the global stock market. It might even trigger some kind of debt crisis or capital outflow from the emerging market. So whether China can resolve this COVID situation is really the key for a relatively stable global economy in Q2.
Oh, thanks for that, Dan Wang, Chief Economist from the Hang Seng Bank, China.